It's like Groundhog Day, with the crypto market taking another beating in the last 24 hours. The question that's on everyone's mind is why? What is going on? The government shutdown ending should have absolutely been pumping our bags, and the reality is it did for a short term until Trump announced the fact that this jobs data wasn't going to be released. The markets do not like uncertainty. So let's break down why this is such an important statement, what's going on at a macro level, and there is an why there is still some bullish optimism in the market. Hit the like button, smash up the subscribe button to a new all-time high. Let's get into it. So with the cryptocurrency market dumping all the way down to well below 98,000, everyone called the end of the bull market. But as always, Bitcoin rallying back towards the end of the day, managing to get back above that $100,000 line. But for a short term there, Bitcoin breaking way below $100,000, breaking the 50-week moving average. And the reality is everyone's starting to believe the end was close. The reality is when you see things of Bitcoin on 98,000, in fact, the whole cryptocurrency market taking a big old dump with nearly $3 billion removed from its market cap within minutes. It's a pretty big number. So why the fear? Bear in mind, the fear right now in the US market, 35, overall crypto market, 15, as low as we have seen ever, in fact. So why are the markets so freaked out? Well, we know that Trump cancelled CPI data and basically said we're never going to get that jobs data. He came out today saying we'll release the jobs data, just not the unemployment information, which right now, if you are in the category of believing that the US is about to go into a recession, that's kind of the stuff you need. Now, we did get the NFIB survey, which is around job openings. And the reality is the US employment rate is set to rise further. In fact, they believe that it's going to be worse than the 2020 financial crisis. Historically, this has been a leading indicator for US employment, which in essence kind of then puts you into a recession. Now, clearly markets don't like recessions. We also then got the new Fed cutting options down to just below 50%, with two top Feds kind of telling us that the market needs stability and not to cut. In fact, Federal Reserve Board member Beth Hammock stated the dollar's weakening this year is not a concern and actually emphasized the need to avoid easing monetary policy, basically saying there is no need to cut rates any further. And this is the balancing act that Jerome Powell and the Federal Reserve have got to decide. Do they protect the jobs and labor market, which in essence they need to cut, or do they try and just let the market run when they wouldn't cut? Hammock emphasized that discussions about dollar depreciation shouldn't be exaggerated, and there has been a lot of talk this year about the dollar weakening. However, it's important to remember we started the year with a very strong dollar. Now, she wasn't all on her own. Alberto Musalem, also part of the Fed, he stated that monetary policy is currently closer to neutral, adding that there is no room for large-scale easing. Basically, these two coming out saying we don't need to cut rates, everything is fine. The market's then clearly not enjoying it. And in fact, we saw large-scale wallets dumping at the fastest pace we have seen in 2025. Everyone thinks the bull run is over and the 4-year cycle is still intact. But is that true? And you know, on this channel, I always try and give you the reasons why, followed by the reasons why it could be good news. And the reality is, well, as always, I've got some of that good news. Bear in mind, don't forget, if you're looking to trade these markets, take the volatility as a friend. BitUnix is the exchange for you, with a 30% rebate offer for everyone who signs up with the link in the description. No KYC and available all over the globe. They have everything you are going to need to trade your favorite cryptocurrencies, from Bitcoin, Ethereum, and every indicator to make sure that your trades are on point. And if you trade successfully and aggressively, we're even going to give you some bonuses for that trade volume as well. So head down to the description, grab that link, head over to BitUnix, grab an account right now. So the good news, and there is good news. The good news is, the question is always, whenever you see these big market dumps, what is actually happening to the capital? Is everyone selling out, going into native currency and running away from the crypto market forever? The answer is no. And the way we look at this is the Bitcoin to USDT ratio. The fact is that Bitcoin is red. We understand that, and people are panicking under 99,300. But only question that matters is the capital leaving? BTC slipping, USDT supply climbing. It's not bearish. This is actually fresh capital stepping in, ready to come into this market, exactly like I talked about on my live stream If we were seeing USDT dominance come down, that would tell us that people are actually cashing out the market and running for the hills. That simply isn't the case. In fact, USD dominance seems to be outperforming Bitcoin dominance, and the ratios between the two favor people holding onto their capital. Raoul Pal given a very interesting overview here of the market, saying expect a few days for the TGA spending to begin significantly adding to liquidity and should persist for several months. That's at nearly $1 trillion sat in that TGA. Also expect Clarity Act for the crypto to begin to get finished and essentially eventually morphing into desperately needed changes in SLR to allow banks to absorb more issuance and re-level their balance sheets, basically driving liquidity to the markets. He finishes by saying this is the liquidity flood and the spice must follow. Raoul Pal bullish on a 2026 bull market cycle. And there's also the MVRV indicator, which is a great indicator to understand where we are in the market cycle. Well, the reality is those short-term holders, the people that are driven by fear, are selling, and well, they're being capitulated out of the market right now. Short-term holders are absolutely getting squeezed. If you look at the MVRV on this chart right now, the cost base are converging, stress is rising, and markets are forcing weak hands out. Long-term holders keep defending the levels and stop selling. Then the reality is we could still be on for that big move into 2026. Now, I just want to be dead straight and honest with people, because I'm sure many people that watch my live stream will say, hold on a minute, 2Bit, you talk that you went into stable coins, and that is true. I actually moved a very small amount of my portfolio that were in some of my higher risk plays, just deleveraging and de-risking with the volatility that's in the market. That capital start exactly as we've talked about with USD dominance, ready to go back into the market as and when I see fit. The vast majority of my portfolio still holding all my altcoins and my Bitcoin, but there's nothing wrong with deleveraging and just making sure you got a bit of money on the side, given what we think could come, but the risk that it doesn't. As always, let me know what you guys think in the comments down below. And don't forget, if you enjoy this content, please hit the like button, hit the subscribe button, share it out with a friend, let them know what's going on, because right now, fear is at an all-time high. And sometimes people just need a quiet conversation as to exactly what's going on, rather than the super hyped, overhyped bullshit. So let me know. As always, thanks for watching. See you in the next one. Bye-bye.